Welcome, welcome. Without further ado, Godric here, your stock market mentor, coming at you Monday night, November 4th, 2024, 10 p.m., 12 p.m. Sorry. Had to get my pencil, Stedler pencil, high quality. Got my journal. Get these notes for you guys. I'm going to talk about some stock market stocks tonight. Go for about an hour or so. Bring your questions, bring your trades, bring your stocks. I'll take a look at them. Don't be upset if I tell you it's trash, because I have a strict criteria for doing what I do. What we're trying to do with stock investing and trading, we're trying to take a lot of the guesswork out of it. There's a way to do business. There's a way to bake a cake, right? If you're a baker, you need flour, you need butter, you need salt sometimes, and sugar. Eggs. Like if you were like to skip the eggs, right? It would be like kind of like too bready, too dry. You just skip. What if you were to skip the sugar, right? You wouldn't have all the ingredients. You need to mix it up. You need the right temperature, baking. You need baking soda to make it rise. It's the same way, and then you have a good cake if you get everything right. It's the same way in investing. You got to have the ingredients. You got to have, volume. You got to have a 10-year chart. We know most companies, let's say 11 out of 12 companies will fail, businesses. Stock market is no exception. So some of these stocks don't last very long. When you get a stock that's on S&P 500, that stock has proven itself. That stock has stood the test of time somewhat. So when I say you want a 10-year chart, you want a stock that survived for 10 years. It hasn't gone bankrupt in year 2 or 3 or 4 or 5. And then the stock went down, got delisted, and no one else bought it. Welcome. Appreciate you guys. Jason, welcome. All top kicks, welcome. Guys, hit those likes for me. Pat like a video game. Get those likes up. Get some people in here. I have a couple trades to show you. They added to the Dow Jones. Lock in. They took off 2 stocks from the Dow Jones because the stocks were trash. And they wanted to put better stocks on there, so they brought in NVDA. Surprise. They've been drooling for NVDA. They took off Intel and DOW, DOW. So those are a sell. Like when I say you want to take the risk, you want to take the chance out of it. Some things work. Like if you're coming onto the Dow, that should indicate massive buying, because a lot of mutual fund managers cover the Dow, which means they buy the Dow stocks, all of them, and they have the money too. And meaning that they have to now buy more NVIDIA, or buy NVIDIA. They don't have it because they cover the Dow. So that would be massive buying and bringing the share price up. Not in one day, but maybe, let's say, over the next 3 months. And when they come off the Dow, Intel and DOW stock, those are sells, because if they cover the Dow and those stocks come off the Dow Jones, then they can sell. There's always going to be hardcore investors that will be like, oh, I don't care if they delist the stock. I'm still going to be in my stock because I love my stock. There's always going to be those hardcore investors that are going to do that, regardless if they take the stock off the Dow Jones or not. But it will take some kind of hit. It's not going to be impervious to selling pressure. So buy rating for NVIDIA and Was it Sherwin-Williams? SHW? Sherwin-Williams Corp. Paint. They do paints. $3.74 a share. Oh, look, it was up $16 today. That was weird. Are you surprised? Massive buying. Volume 5.6 million, above average. Symbol SHW. So this stock, I'm looking at it for 5 years. Pretty good stock. It was about 193 5 years ago, and now it's going to be basically double price, just about. So it has a nice upward trend. It's proven its metal. They do paints internationally. SHW, check it out. Welcome, appreciate you guys. I'm gonna take a couple questions and get into it. Just drop your questions in the chat. If I miss them, just put them back in again. I can only scroll back so far. MAXN, Clutch Hustler. MAXN, is that a stock? I'm not familiar with that stock. MAXN. MAXN. Let me look at it for you. Retire. You guys take notes tonight. I want to see some notes. I want to see some journals going. Do your homework. The stock market. Mondays, 11/4. Kind of exciting tonight. We might have some news after midnight about the election. We may not hear convincing news for a while. I'm not too sure. We'll see. Be nice to get the results, but I don't think they're going to happen as fast as you guys think they're going to happen. Okay, so MAXN, let me see if I can pull it up. MAXN Solar Technology. MAXN Solar Techno. MAXN. Now, when it says solar, does that mean solar panels? Because isn't that like old technology? MAXN Solar Technologies Limited designs, manufactures, markets, and sells solar panels and related solar system components worldwide. The company provides integrated black contact and shingled solar cells and panels under the SunPower brand. Okay, I just want to say they're international. It says worldwide. I just want to know what countries. Well, on the 5-year, I have them starting in 2021. So they don't even have a 5-year chart. They're like 3 years old. Is that right? Double check that. Volume is 3.5 million. So I'm going to give them a check mark for volume. 3.5 million volume, that's decent. I like to have 2 million a day. Check. 10-year chart, no. X. Share price, $10. $10.55 a share. Obviously, that's too low. That's a trashy share price. Why? Because who made money in a stock that's $10? Nobody. Matter of fact, according to this, back in 2021, it was $4,000 a share. Can that even be right? And now it's $10. And it was $2,000 back in 2023. Now it's $10. So, like, what happened? The bottom dropped out of it. Like, can you imagine buying a share at $4,000 or $2,000? They probably have stock split, right? So I give them credit for stock split. Let me see. Check for stock splits. StockSplitHistory.com. Because stock splits are good. That's a criteria. Put in your symbol, MAXN. MAXN. MAXN has had one stock split. Okay, they get it. They get a check mark. I told you. All right, back over here. So the share price is too low. X. No 10-year chart. X. They got volume. They got a stock split. I know there's no PE. Why do you invest in a stock with no PE? Dash. PE is a dash. X. Market cap, 146 million. Oh my God. Dude, bro. 146 million, bro? This is the market cap of a house in Beverly Hills, honestly. You're investing in, or considering investing in, they probably have no employees. They probably have no revenue. Let's see. Oh, they do have revenue. 828 million. They have some revenue. X for the market cap. Can the stock double? No. X. Stock has gone down drastically. It's in the crappers. What else? Is it at a new high? No. X. Can you buy the product? I'm assuming you can buy the product. Solar panels. Find out. Give it an X. 1, 2. I can only find about 3 X's, 3 check marks on here, which is negatory. Would have to pass. Now, maybe you think they're going to turn around or something. Something's going to happen. You know, Hail Mary pass or something. But the shares were literally at $5,000 in 21 and $2,000 in 23. And now they're $10. So someone got played. Next. Thanks for asking. Any thoughts on Hood? User. Any thoughts on Hood? They recently did, and RS got back in compliance. Oh, that's why they were out of compliance. What long calls are you buying on this? Reverse stock split. They did a reverse stock split? Oh, they did a reverse stock split? That's bad. If a stock split is good, reverse stock split is bad. Let me see. Hang on. Let me see. Maybe I screwed up. Split placed on October 9th, 2024 was a 1-for-100 reverse split. Oh, damn. So they don't get the check mark for stock splits. Okay, guys. Stock splits are good because the theory of a stock split is your stock is doing great. It's going up and up and up and up. And they're doing great, making investors money. Share price is going higher and higher. And they split down like a 2-for-1, which is a forward split, or a 3-for-1, because the share price is so high and they want to attract more investors. And they bring the price down and give you more shares. That's a forward stock split. That's a good thing. But if they do a reverse split, what they're saying is, we were in our heyday and we're doing great, and now the stock has come down so low, and now we have to reverse split to get it back up to a respectable share price. Because our stock is going into crappers, going into penny stock territory. We're about to be delisted. Let's do a reverse split, which is basically a facelift. And if we can get our shares back to 50 or 100, it looks better. And it does look better. A share price of 50, 100 looks kind of robust. A share price of 10 looks awful. So that's probably why they did that, stock split. But then did it work? No, because the shares are still sinking. They're still going down. So that's a failed company. You want to get a company that, if you look at their 5-year chart, it goes up nicely. You know, 50, 75, 100, 120, 200. So that's why I had to pass on this one. It could be a short. It could be buy puts or sell short. There's no profits. Okay, where were we? Hood. You want to look at Hood? Robinhood. Robinhood had earnings, I know, came out. I think the market... Did the market like the earnings? Oh, I see it. It sold off from about 40... Sold off from about 28 to 24. Sold off after earnings. Look at the 5-year chart. Hood was doing great. Hood was $85 in 2021. And it kind of traded around $10 for many years, and now it's starting to climb back up. So it's starting to climb up, right? But it doesn't get the check mark for the 5-year because it's lower now than it was 5 years ago. That's X on the Hood. Volume, they have the volume, 15 million. Great. Check mark for volume. Share price, no. Share price, ideally, should be 100, 200, 400. Check mark for the volume. X for the share price. X for the 10-year chart. Let me look at PE. PE is 33. That's a 4 PE. PE here is 41, so it has a PE, so check mark on the PE. Stocks, dividend, no dividend. Am I right? No dividend. No dividend, check. X, do they have a product you can easily buy? Yes, the app, Robinhood app, so check. Can the stock double? No. Is it a new high? No. What else? Stock splits. Pretty sure there's no stock splits on Hood. Let me check. Do they have a reverse split? I hope not. Hood. Stocksplithistory.com, guys. Write it down. Robinhood has 0 stock splits. Okay. So, X. 1, 2. I can only find 3 check marks, guys. I'll give them a check mark for the PE. 4 check marks. The PE, you can use the product. Has a volume. Oh, let me check cover calls. I'm not going to check cover calls in the other stock because it's probably not a safe stock to be in. Let's look at Hood's cover calls, can we? So go to options, click on options, right? You can, if you guys don't have a stock market account, which you need that, just click on the options. You can go to Yahoo Finance and click on option chain, and they get most any stocks option chain. If they have an option chain, you can sell covered calls, or you can buy puts or calls, which is important. So we're gonna go buy the shares today at $24, $24.30, $24.30. I have a feeling this is going to be a nice cover call, guys. So buy here at $24 and then go out 30 days, which is December 6th, 31 days. On the strikes, put all. On the expirations, put all. And then you're going to go at the money, which is $24.30. $24.50 is paying $1.60, which sounds great. We can go up to about $25.50. 25. Let's say we go 25.50. So we're going to buy the shares here at 24.30. So the 25.50 cover call for 30 days out. We're going to get 118 by 137. So let's do a limit order of 120. I'm gonna give you a bonus. Do a limit order of 120. When the bid's 118, it will probably take in 10 minutes. So I'm going to say 120. I'm pretty sure I can get that. Let's do the math. Get your calculators out. Commence the ROI. So hold the shares here at the market, $24.30. And you get $1.20 per month for the cover call, which is riding the cover call $1 higher, $1.20 higher. So look, buy the shares at $24.30, right to $25.50, which is $1.20 higher, and you're going to get $1.20 premium. That's what you call a sweet spot. Exactly the same. 120, 120. 120, did the math with me, divided by, that's your premium, $120 per contract per month. Divided by your investment of $24.31. 4.9% return. 4.93% return a month, which is a great return for a cover call. And if you did 10 cover calls a year, that's 49% return a year. You could probably do 12, but let's just say you do 10. And what that means is after 2 years, you're going to basically double your money. You'll have 100% return. Probably the stock will be okay in 2 years. I know they have a lot of revenue. Have a lot of backers. I don't like the stock that much, but I think it has 5 check marks with the cover call. So It's right below par. It's just right below par. If you like the stock, you can do covered calls on it and get $1.20 for a $2,400 investment. You get $120 every month for a $2,400 investment, and that's your business. You have the shares, which is 100 shares. Those shares have value. Write the cover call on those shares every month. And if it gets taken out, which means the shares go up, you'll sell at $25.50, buy them back. Write another cover call. If it's 25, you can write to 26. If it's 26, you write to 27. If you're in November, you write December. If it's December, you write January. So that's what I got to say about that. I don't like Robinhood personally because I have a crappy app and you can't call brokers 24/7 to answer your issues or problems. You got to deal with emails and stuff. With Schwab, they should pay me for advertising. For Schwab, they have 24-hour access to your accounts, brokers 24/7, answer all your questions. A real person, not an AI, not an email system. That's why they're better. Yeah. Okay. Hope that wasn't too much questions. I've been trading the wheel strategy against Hood for the past 2 months. I'm up 20%. User 897441. Does that mean you don't have an account? Get a TikTok account. Come in here. Don't be some cranes, because that motivates me. Don't be some likes. Thanks for my likes, guys. Give me some more likes. Pat, 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 pat. If you want to sub, it's only $5 a month. I can bring you up. You can ask questions. You can DM me. I'll look at your trades if you sub. And do it right, man. But anyways, in Hood, you're doing the wheel strategy, and you're up 2 months, and you're up 20%, which means he or she is buying the shares, writing the cover call. If the shares get taken out, you'll sell a naked put or a put. And then if the shares drop, you'll buy the shares. And then if the shares are bought, you'll do another cover call. So a wheel strategy is basically alternating from the naked put to the cover call, which is a decent strategy. I just don't particularly like it because if you want to do a cover call, just buy the shares, do a cover call. If you want to do naked put, just buy the shares, do naked put. And essentially, they're very similar trades. It's a very similar strategy. They're both long positions. You want the stock to maintain and go up, ideally. But yeah, the wheel strategy is great, basically. You can start with a naked put or a covered put. And what that means is, let's just say we got in Robinhood, 30 days, right? December 6th. If the stock is 24.30, what I would do, I would sell a put for about 23.50. That gives you a 94 cents by $1. Let's just say $1, limit order $1, right? So you're going to get $1 income, and you only have to buy it if it drops below 23.50, which means it has to drop a point. And let's do the math. $1, 1.0, divided by your investment of 23.50. 4.2%. Still a great return. You don't even have to have the shares for a naked put or a covered put. And you're getting 4.2% per month. And that's riding below the strike price, which is out of the money. That's a naked put, basically. Make sense? Any questions on that? Write that down in your journal. Do you sport bet or have you? Zamora, cool name. Guys, give me some more likes. Get the likes to 2,000. Pat, 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 pat. Do you sports bet or have you? This DraftKings I don't like because you have to bet on the players and not really like just bet the winner of the game or just bet like the spread, which is what they do in Vegas. Like you go to Vegas, you bet on the sports teams like the football teams, and let's say Giants versus Atlanta, whatever. You're gonna bet the winner. You basically give like a 10% commission because there's a spread for one, and then like you pay like you bet like 90 to win like it's never exactly the amount. You get like less. You give it 10% vig in Vegas, basically. So the bookies make their money, but I just think it's more simple. And this DraftKings, it's just so complicated. Like, if you look at DraftKings, which is what I call sports betting, if you're doing it on the app, there's like thousands of competitors, and they're all competing for like a big prize. And some people have like 100 accounts. It's just too much. It doesn't interest me. So if you get a sports bet, I just say just go to Vegas. This is more simple. I think there's probably a way to do DraftKings. I don't know. I'm not interested really. Appreciate you guys. Thanks for coming on. We're gonna go for about an hour tonight. Look at some positions. I have something behind me I want to talk about in a minute. It's a NVIDIA spread, because we talked about NVIDIA going on the Dow Jones, probably going up because of the buying, let's say over 1, 2, 3, 4 months, right? So this is a December. Take a look. I got +7 here, December 138 call. And then I'm selling a December 144 call. That's a 6-point spread. That's called a spread. That's a long spread. That's a debit spread, a vertical. And what you're doing is you're hoping that NVIDIA comes up beyond 38 and ideally past 44. And the value of buying one and selling one is that you have plenty of long play. It doesn't cost that much, because here you're only paying 10 points, which is $1,000. And you'll get back 7 points, which is $700. So it's really only costing you about $250. So for $250, you can do one contract. And the return is good, because the return could be maximum of $600 back, because it's a 6-point spread. Right? Just write this down. Work it out. Okay. If you're buying the call for 10 on the 138, and you're selling a call for 772 on the 144, it's only costing you $250 to do the position. So you're putting up $250, okay, or $260, and you can get a maximum return of $600 if NVIDIA closes above 144 by December. This is December 20th, which probably it will. I mean, barring a stock market correction, it probably will be, 150. It's just, we're in the holidays, holiday rally. The market's kind of high right now. Things are popping. NVIDIA's popping. So I think it's a good trade. Just write it down. Just look at NVIDIA. Like, it's 136 today. And by the way, it was 139 at the open, right? So a lot of trading in NVIDIA, like, don't get like your hopes up. Like, when we're up 4 points in NVIDIA, it's going to sell down. If you look at let me pull it up for you, by the way. NVDA. If you look at the equity, look at the, let's say 3-month chart. Let's do 1 month. You see all these little peaks and valleys, because there's probably a lot of trading bots on NVIDIA. There's probably a lot of traders that are getting like 1 point, 2 points, 3 points. They're scalping it. So when it opens up +4 from the day before, which is what happened in NVIDIA, it sells down because people are taking their profit. And then tomorrow, it's 136. It'll go up $1 or $2 at the open. And then what? It's going to sell back down. So, like, it's not like it's going up $4 a day. It goes up $4 and down $3.90. So it really only goes up a small amount every day, if you look at it that way. NVIDIA has a great 5-year chart. If you look at 5-year chart, NVIDIA was $5 5 years ago, and now it's 135. So like 25-fold, 30-fold. Huge return. So it's opposite of that stock. It's opposite of that MAXN stock, where the stock was really high and it came down. NVIDIA was really low and it came up. And also it has a volume, 187 million, check mark. It has a robust share price, $135, check mark. You can buy that product because they do computers and chips, check mark. They have a PE, which is a positive earnings, check mark. They have a market cap. By the way, market cap should be, ideally, above 50 billion. And I just say that because you don't want to be too small to like just get crushed by a competitor. It needs to be a certain size to withstand a market economic storm, which is, what happened with the COVID. Some businesses went out of business, right? So NVIDIA has all the check marks. It has a dividend. A tiny dividend, tiny, but dividend is dividend. And let's put it on the stock split history, NVDA, stocksplithistory.com. NVIDIA has had 6 stock splits, and they're all forward. In 2000, a 2-for-1. In 2001, a 2-for-1. In 2006, a 2-for-1. In 2007, a 3-for-2. In 2021, a 4-for-1. 2024, a 10-for-1. Like, if you had 100 shares in 2000, it doubles on the first split, and you have 200. And then it doubles again at 400, 800, and then 3-for-2 is like 600, it's like 1,400. And then 4-for-1 is 3,200, and then 10-for-1 is 320 times your shares. So 100 shares gives you 3,200 shares. 100 shares back in 2000 NVIDIA, and now you have 3,200 shares, and the price is probably higher still because it's 135. Let's do the math. If you had 100 shares in 2000, you have 3,200 times 135. You have $423,000 presently, and let's say the share price was, I don't know, 80 back in 2000. 80, I remember it was 80 times 100. So you went from 8,000 to 420,000. That's how you get like 125 times your money. This is a success story. This is stock want to be in. They have what? A good product. They have employees. They have probably good management. It's hot. Great, a huge, too big to fail market cap. They have all the check marks. And they have a cover call. Should I show you? Spend $13,500 on the video. Look at your 1 month out on the cover call. And I would write just above the money. So if it's 135, I write the 140. The video is 135.41 in after hours. 135.41 the video after hours. So buy the shares here, 13,500. Write the 140. December 6th, 31 days. Get 785. Write the 141 for 735. Write the 142 for 7. So here we go. Buy the shares here, 135.41. Write the 142. Why? Because it's 7 points of share growth. You're selling it 7 points higher, agreeing to. You're getting 7 points premium, 7 by 715, which is really tight. That's just a nice tight bid ask. You don't need to do any, just do a market order right there. $7 on the cover call, which is $700 income or premium, and you're spending $13,500. So let's do the math on that. Do the math with me. 7.0 premium divided by your share price of 135.41. Oh, 54. Same difference. 5.16% return. Hello. Even better than Hood. And the stock is better. The premium is better and the stock is better. 5.16% return a month and then 51% return for the year. And after 2 years, you're going to get 100% return if you stay with the stock. Now, the stock, and probably like Hood, and probably any kind of cover call stock, could go on this roller coaster ride. The idea is that if you're behind your stock, you stick with it. You know, if the shares get called away, you get back in it. If the shares dip, you keep writing covered calls. So maybe you won't get a 51% return for the year because maybe the share price will go down. Maybe the share price will go down 20%, and you're going to get a 50% return on the premiums for the covered calls. So you're still going to be up 30%. Stick with the math. Repeat, rinse and repeat. And here it's showing, I'm showing a put here, 136 for November 22nd. That's like a naked put. And over here, if you look down here, I have 2 covered calls for December 2026. 164. I went way out on that. That's more advanced. But it's money back. Okay, questions. So, back to the point about NVIDIA going to the Dow Jones. It's probably a safe stock to be in. It's probably ideal. And it probably will go up. And whether you're doing covered calls, or you're holding the shares, or you're buying some kind of call spread, which is what I'm showing you, you'll probably make some money. Yeah. Regardless of who's president. Okay, sorry if I missed your question. Let me scroll back. GME YOLO 10 call January 2027. GameStop 10 call January 2027. That's going on pretty far. GME, like, I like hype stocks, but I don't like GME because it didn't have my check marks. I have to be honest. GME. They're obviously having problems in the franchise, right? They're barely making it. The 5-year chart looks like what? 5-year chart looks not great. It was higher 5 years ago. Well, no, not really. Yeah. I have a $1 share price in January 2020. Went up to about 80, and it's trading. Now it's 20. It's not a great 5-year chart, but it doesn't get a check mark because it doesn't have an obvious uptrend. So it has an X, GME. So X on the 5-year. No robust share price, $22 a share. X. Has the volume, check mark. 4 million volume is pretty damn good. Does it have a PE? Let's take a look. PE 174, high, but a PE nevertheless. Check mark. Dividends, no. X. Stock splits, I don't think it has stock splits. GME, let's take a look. GME. Oh, it has 2 splits. Are there 4? They are 4. In 2007 and 2022. So it has a check for the stock splits. I know it has a great cover call. I'm going to give it a check. You can buy the product, check. Is it a new high? No, X. Can it double? No, X. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There's one more. Can't remember offhand. I'll remember. But anyways, I have 1, 2, 3, 4, 5. I think I'm going to give it 6 check marks. So better than Hood, but just barely. It's barely there. I like to have 7 to 8 check marks. NVIDIA has all 11. Real quick, I'm just going to quickly show you this cover call, which is ridiculous on GME because it has a lot of hype. That part I like. GME, buy 100 shares for $2,200. 22 share price. 22.27 after hours. And I read the cover call for 1 month out. This is how you retire in the stock market. You're getting money. You're getting cover call money. You're getting dividends. You're getting share growth. But you're not getting share growth in GME. That's why it's problematic. You get share growth in NVIDIA. You get share growth in Netflix, in Starbucks. Dividends in Starbucks. GME, you're not getting dividends. You're not getting share growth. That's why it's problematic. But you're getting cover call money, so let's do that. 31 days, December 6th. stock price 2027-ish. So, I'm sorry, 22.27. So we're right to 23.50. So we're right to 23.50. So we're going to go out 23.50. We're going to go $1.20 higher. And we're getting 155 premium. So 100 shares of GameStop stock is going to give you a cover call above the share price, $1.20 above the share price, 23.50 strike, write it down, $1.55, $155 income on the cover call. Let's do the math on that. 1.55 per share, or $155 for 100 shares, divided by your investment of 23.50 is 6.59%. Hello. 6.59%. Gotta love that hype. That's 66% return, close enough, a year. So if this stock survives, which it may not, but let's say it survived this long, right, for a year, you should have 66% return on the cover call, which is 100K is bringing you 66K. $1 million is bringing you $600,000. This is how you retire, okay? Now, you wouldn't put it all in GameStop. You diversify, but you can have, NVIDIA, Hood, GameStop, ideally better stocks, Netflix, what? Give me one more, Palantir, something decent, but a good cover call. And then you'll probably taper them off with some dividends, PepsiCo, PEP dividend, McDonald's, MCD, Starbucks, SBW, SBUX. Because what is your financial plan when you are 7 years old and retired? You're going to be living on Social Security, paycheck to paycheck. What is your financial plan? Do you have cover calls coming in every month on month? You have dividends? Babe, take some notes. All right. Guys, I appreciate you. Thanks for the likes. Hit the likes a little bit more. And if you guys can all give, there's a few people in here. Everybody give 2 shares. Hit the share button in the bottom corner. Send it to 2 of your friends. Bring them back in here. We're going to go another, 20 minutes. Do a few more questions. If I miss your questions, I apologize. You can DM me. 1 question at a time, please. I'm going to scroll back, see where I get to. Thank you for inviting you guys. HBAR, HBAR, user 583. HBAR, HBAR. Is that a stock? Let's take a look. You guys give me some no-name stocks today, man. I think I'm going to make one of my criteria is to be on the S&P 500, honestly. That's S&P 500 is top brass. If it's on there, it's probably damn good. Huntington Bank Share. HBAN. Is it a banking stock? Take a look. Business summary. Huntington Bank Shares Incorporated operates as a bank. Surprise, surprise. Holding company for the Huntington National Bank that provides commercial, consumer, and mortgage banking services in the United States. The company offers financial products and services to customers and businesses, including deposits, lending, payments, mortgage, banking, dealer financing, blah, 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 blah. Okay, so it's another bank. $15 a share. No robust share price. Gets an X. Volume, 11 million. Has the volume. Check. Does it have a 5-year chart? Take a look. Ideally, you want to do a 10-year chart, but I have the 5-year here on my Schwab. I don't want to mess up my settings. I'm going to do 5-year today. Okay, so 5 years ago, it actually was $14. So it kind of maintained and went up a little bit. I'm going to give it a check mark for the 5-year chart. PE. Oh, I see a dividend. Hello, 4% dividend. Wait a minute. This is looking better now. Check mark for dividend. I'm assuming a PE. Check mark for PE. 15 PE. Check mark. Oh, can I use the product? Yes. Open an account. Is it at a new high? No. It's not at a new high. The high is 17. No new high, and it can't double. And 1, 2, 3, 4, 5. I have 5 check marks. Let's see if it has stock splits. Probably not. Don't get your hopes up. Stock splits. StockSplitHistory.com. HBAN. Probably not. Has had 10 splits. What? Oh, this one goes back all the way to 94. I was just looking at the 5-year chart. 5 for 4, 11 for 10, 11 for 10. 11 for 10 is still a stock split. So they get stock splits. 1, 2, 3, 4, 5, 6. I like the dividend, 4% dividend. So one thing you can look up is, have they, you got to do your homework on this one, have they increased the dividend over time? Because what most stocks do, successful dividend stocks, is they want to keep up with inflation. So they'll give you more dividend every year, every couple of years. Has it done that? Do your own homework. 4% dividend is nice. That could be like a dividend stock. Has the volume. Oh, look at the market cap. That's what I meant to say. Market cap. 22 billion. Just under. It's an old company, but it's still small. It probably means it can't grow. So I'm going to give them an X for that. I got 6 check marks. It barely passes. But I do like the dividend. Oh, let me see on the cover call. Now, for a 4% dividend, I'm assuming there's no cover call, or the cover call is pretty shallow. But let's check real quick. Let's just run through this real quick. Banking stock. Generally, I don't like these, but this one's... So it doesn't have that big of an option chain, but it has a December 20 for 45 days. Let's look at that one. $15, $15.30. Right? No, it doesn't give enough. It doesn't pay enough. If you write the $16 for 35 cents, let me see. You only get 35 cents or $35. 0.35 divided by 15. What's your share price? 15.30. 15.30 is not going to be enough. 2.2% return. So just under the 3% minimum for the cover call. So I'll give it 6 check marks. Decent. Thank you for that. Questions? Since I got you guys in here, I want to show you something about, I have a couple of pictures to show you. Apple. Apple's great. I mean, Apple's kind of been stagnant. It hasn't been going places in the last 3 months, 4 months. But Apple long term is great. They do have a cover call. They get plenty of check marks. I like Apple. Do you have? Okay. Let me see if I can show you something. I showed you a spread there. Buying the December 138 and selling the 144. Your investment's minimum $250, and it can get you $600 back. So you can double your money, right? See, if you didn't sell the higher call and you just bought the call, you'd have a much greater investment. And if you want to invest $250, for example, you'd have to buy a call much farther down the track, maybe like 170. And at that point, it's kind of like way out of the money. It's not really, it's too risky. So the reason you do a spread, which is to buy one and sell one, buy one and sell the higher one, is to get plenty of play and to have a relevant position and to get money back. It's just a good trade overall, I think. But the stock does have to move for you to make money. That's the problem. When you're buying options, you almost always have to have the stock move to make money. When you're selling options, this is why I teach people to sell cover calls and naked puts, and to do. When I get to that, I'm gonna teach you how to do credit spreads, because you're getting money by selling the call. So the stock doesn't have to move. That's the beauty of it. When you get a dividend, the stock doesn't really have to move because you get the dividend, 4% for this bank stock, HBAN. And on these cover calls, you're getting like 3%, 4%, 5%, 6% a month income. The stock doesn't have to move. It can go down, up, stay the same. That's why they're better. Write it down, cover calls. Palantir, should I do IBM? You guys are hitting me upside the head now. IBM Palantir, tempting. I'm just gonna say Palantir passes the test. I think it has 6 check marks. I did Palantir plenty. It has a great cover call. Let me just look real quick on Palantir for you. I haven't seen IBM for a long time. PLTR. Buy here for 47. Oh, by the way, things are heating up in the Middle East. Okay, so Palantir does counterterrorism, intelligence, military stuff, government contracts. So probably it's going to stay relevant. And it's at a new high, broke a new high recently. So it gets a check mark for the new high, which is good. And look at this cover call. The volume is great. 75 million volume. Hello. 40. Oh, look. After hours. It must have had earnings. It went $5 after hours to 47. But I'm just gonna do the 41 price, which is what it was today in the trading day. And if we go December 6th, 31 days, buy the shares here for 41.41. That's $4,000 investment, buy 100 shares. And if you have $8,000, you can buy 200 shares. 12,300 shares. See where this is going? See how this math works, guys? Like, eventually, and look at this. At the money, it's paying $375, which is almost 10%, which is awesome. And probably it was paying this because of earnings, but earnings played out. So it probably has less return tomorrow, but we'll see. We'll see. If you sell the 44, you're getting 250, which is 2.5 points. So $41.41 plus 2.5 points for share growth, and we're going to sell the 44. That gives us 44, and that pays us 250. So that's the sweet spot. 250 premium a month on Palantir. There's always earnings happening, so I'm not going to discount the earnings. 2.5 premium divided by 41.41 share price equals 6.037%. Above 6%, Palantir. 6.037, which is a great return for a month for a cover call. Actually, astounding. And then 60% return for the year. After a year, you can get 120% return if you stay with this stock. And probably it'll go higher. It's going higher. You probably get some share growth on that. Palantir's great. Love Palantir. It's not great. I shouldn't say it's not great, but it's doing better, and the cover call kicks ass. Palantir Technologies builds and deploys software platforms for intelligence community to assist in counterterrorism investigations, operations in the United States, United Kingdom, internationally. Company provides Palantir Gotham software platform, which enables users to identify patterns hidden deep in data sheets, ranging from signals intelligence sources. Okay, they have a PE. PE was really high, 246. They're highly, highly priced. Market cap 93 billion, just above, just enough. Not too big, not too small. Okay, IBM, really quickly, IBM was never a boss. They always were there. They're always there doing something, but never, it was never a Microsoft for some reason. It was never an Amazon for whatever reason. They're always a player, but just never the top. I remember IBM back like in the 80s and 90s. All right. 206 share price. You see, robust share price, okay? Check mark, IBM. Volume, 2.6 million. Check mark for volume. 10-year chart, 5-year chart. Ooh. It was actually the same price. 5 years ago. I'm going to give it a check mark for maintaining. It didn't go down. It maintains. Check mark. Can you buy the product? Yes. Check mark. PE, dividend, cover call. Has a dividend, 3.21%. So it's a dividend stock. Check. Has a PE, 28. Check. Has market cap, 191 billion. Check. 1, 2, 3, 4, 5, 6, 7. It has 8 check marks, and I'm not even done. So, green light on IBM. Oh, let's just look at the cover call real quick. Don't expect the share price to go up drastically. It's pretty much maintaining share price. It's a dividend stock, so it doesn't need to go up that much. It just needs to pay the dividend. IBM, dividend stock. So let me just say, I don't think it has a cover call, but let's check. It doesn't need to have a cover call. Options, all. 31 days, December 6th. Buy the shares here at 206. Look at a robust share price. You're going to spend 20 grand to do 100 shares with NVDA, IBM. 206.60. And you can write the cover call maybe for the 210. Yeah, the 210 is paying 297. So 210 paying 297, which is decent. You agree to sell it for higher and get paid for that. 297 divided by share price of 206. 1.44% return. It has a very small cover call. And if that's the case, what you probably would do is write it a little bit higher, because, let me see, 240, 210, 215. Yeah, well, regardless if you buy if you do the cover call or not, it's 1.4%. You get $300 on this one per month on the cover call, and I don't want you to sell the shares on the cover call and then you lose the dividend. So you might have to pick whether you're going to do the dividend on that one, which is 3.2%, or the cover call, which is 1.4% per month. But it's a great stock. Thank you, guys. We're getting towards the end. Take a couple more questions. I wanted to show you something else. I've been on this picture the whole time, guys. So sorry. All right, let's see. Where was I? I'm going to show you on this one. This is a part of a spread. I'll need to show you that. This is the actual spread. That's in the video. That's Walmart. Walmart pays a great cover call, by the way. Probably because of earnings. I'll show you something. Where was that? I wanted to show you. Here we go. Okay, look. Cover calls, right? On Tesla, right? If you were with Tesla, you got a nice bump when the earnings came out, and guess what? It went to around 260, 265. So here it's showing that we sold the cover call on here. 1850. Check it out. I circled it. That's $1,800 Tesla gives you, which is a great return on the cover call for selling the 280. And look, the stock went down. Oh, after earnings, the stock sold back down. So you guys get ready. When earnings are released and the stock goes up, I want you to write a note to yourself. Expect the stock to sell back down, because it gets quiet, things quiet down. Now it's going back down. And if you sold the cover call when it peaked, look, the cover call is back to 206. You sold it for 18, got $1,800. This is what a cover call looks like. And if the stock comes down after, that $18 cover call goes down to $2. Now you can buy it back and take a $16 or a $1,600 gain. And now you have your shares free and clear. Look at down here. It's showing It's showing a profit of $1,600. This is what the cover call looks like. When the stock swings up, you saw the cover call, and the stock swings back down, and then you can see a profit right away. And then you can buy it back, pay $200 to buy it back, and then what? Write another cover call. You see? So, anyways, that's a trade for you. This one too. You guys want to take a picture of this one? This one. Oh, okay. Last week, someone showed me this quantum computer company, which wasn't a great company, but had a great cover call. IONQ. This is showing the stock went up to about 17, and it's showing a cover call for 162, which is a great return. $162 on a $16 stock, and then it went down to $14.50. It sold off. Look at the cover call. It went from 162 to 48. So at this point, we can buy it back if we want to and do another cover call. Showing here a profit of $570. You see that? This is what a cover call looks like in your account. In this case, the shares kind of dropped. And in Tesla, the shares kind of dropped. So guys, get ready for your shares to drop. Don't freak out. Ideally, the shares will at some point come back up. If it's a good stock, if you got all the check marks, if you vetted your stocks, if it has a reasonable product, revenue, PE, dividends, stock splits, volume, it's going to maintain. People are going to like it. It's going to come back up. So don't lose your head if your stock drops off. Look at your cover call income every month. For 10 months, for 10 times a year, 162. I think it was $16 when we did this cover call. Let's do the math on that. 1.62 premium divided by your share price of $16. I think it was $16.50. 9.8% return. Damn, like in 1 year you can have your money back on this one. Now, don't just do that because it's a risk, because it doesn't really have a lot of criteria. So don't, but some people do it. Some people do it. And some people are going to be at Walmart collecting receipts at 75 years old. So which are you? Guys, I'm about to wrap up. Give me a sub. It's only $5 a month. I can bring you up here, ask questions. Also, I can go in your DMs. Trump. Did Trump win? I'll tell you a quick story. Back in 2016, was it? We weren't sure. It was Clinton and Trump. And it was like 6 o'clock. It was like 6 o'clock p.m. I was picking the kids from school. And people were saying the news came out that Trump won because he won Florida. And that was like, Florida was the deciding state. You know, they figured out that early. So, who knows, man. All right, guys, I appreciate you. Give me a few likes on the way out. You want to drop me a crane if you like the content, drop me a crane. I won't say no if you gift. What do you think of an option call for NVIDIA 162 December 20? You mean to buy the call? Warwick. What do you think of an option call for NVIDIA for 162 for December 20? I say it's too risky. Don't do it. You're going to do NVIDIA, right? Even if they're going on the Dow Jones, don't lose your head, okay? You want to don't buy 162. That's desperate. Buy 140 or 145. Let me tell you. Is that December 20? I know why you're doing that, because it's so cheap, right? 162 NVIDIA. Let me pull it up. Let's pull it up. NVIDIA. NVDA. It's too risky, bro. Don't do it. Give me 1 second here. December 20th. Okay, the 162 is going to cost you cheap. $288, right? It's better to go lower because that can expire worthless. I would go 150. So $288, right? This is what you do, okay? Instead of buying the 162 for one call for $288, I want you to buy the 138 call for December, okay? That costs $1,000, and then at the same time, you're gonna sell the 144 call, which is the last trade I showed you. You're gonna get back $760. It's gonna cost you about $260. So you're gonna do a spread. Buy the 138 call for December. They're testing me, guys. They're testing me. Okay, so we wanted to spend $288 instead of doing the 162 call, which is way out there, which is probably gonna be worthless. You have to trade that immediately when it went up to get a profit. You can get a better position by going lower, by buying the 138 call, selling the 144 call, which is debit spread, vertical. It's going to cost you about $288, and you're going to have a $600 return if NVIDIA can just go above 144. So that's much better, I think. That's a better way to do a spread. That's a much better choice, I think. That's my advice. Because that 162 call is so much fluff up there that we don't think it's going to go that high, but whenever you'd have to sell it at a spike and then and hope you get that spike. If you don't get that spike in the share price, that option will go to zero and fast. Whereas this spread I'm showing you, the 138, as long as it's around 138, 140, you're good because you're going to start getting play. And if it can go to 144 by expiration, you're going to get $600 back. So more than double your money. I think it's better. Guys, I appreciate you. We're about to wrap up. I'll take one more question. I got a couple thousand in Tesla. I hope Trump doesn't lose. So I hope Trump doesn't lose. So I feel you, bro. But you know what? I want you to consider doing trades that don't even rely on who's president. Don't even rely on that much on the economy. You know, great stocks always going to do great, no matter who's president. Dividends are going to pay dividends, no matter who's president. Cover calls are going to pay cover calls. So think about that. Think about taking the risk out of it. Think about taking the chance out of it. You want to have all the ingredients for your cake. You won't have to rely on presidents, man. Listen to me. Hear me. Guys, I appreciate you. $12 Snap. Call 11:15. I don't like Snap because they were having problems with the share price. Let's do Snap next week. I know it probably has a cover call because it's a lot of hype, but I don't think it's a great stock, if I remember correctly. Creator. Trump. Appreciate you guys. All right, guys. I'm going to wrap it up. Dr. Creator, Stock Market Mentor. You want to send me a question in the DMs? I'll get back with you. Next, I'm gonna definitely be here next Monday night, but maybe also during the week. Throw me some cranes if you like, some stars. Throw me a sub if you like my content. Appreciate you guys. Good night. Thank you. The person who subbed, I'll give you.